Hey, good morning. And it's Dan Moorhead. Thanks for joining us. We have the whole investment team here for a monthly call on blockchain. We really like to provide educational sessions for the community. Sometimes they're very general, sometimes they're a deep dive on the global macro situation, which is incredibly positive for blockchain. Today we picked talking about DeFi. DeFi is a fascinating use case that we've been interested in for many years. The markets are really just taking off right now. We've just put out our investor letter earlier or late last week, which has a great quote from Hemingway. Slowly, two ways, gradually, then suddenly. And that's basically how it feels about DeFi. There's a lot of these projects that have been worked on for many, many years. And just now they're really starting to gain traction and usefulness. There's still, although it's around a $10 billion market now, it's still very small relative to the opportunity to decentralize finance. So we have two fascinating founders with us today for a panel. Joe Lau is the co-founder and CTO of Alchemy, which provides the infrastructure for doing DeFi. And then Ray Tao Su is the founder of Akala. And I want to hand that to my co-CIO, Joey Krug, to talk about the opportunity here in the space. And then Paul Bradatocket will be conducting the panel.
Awesome. Thanks, Dan. So we're going to walk through sort of kind of the history of DeFi, what actually DeFi is, sort of how it works, and what some of the main projects are in the DeFi space. So at first, if you think about the cryptocurrency space, everyone's familiar with Bitcoin. It solved the double spend problem. So how do you transfer this internet money while being certain that someone can't spend the same money twice? And it was basically just used for monetary transactions, sending money from point A to point B globally at very low fees. And it wasn't until Ethereum came out in 2014, 2015, when this started to change, and Ethereum basically added this idea of smart contracts, which are very critical to DeFi. The whole idea of smart contracts is you have these computer programs that basically programmatically control financial transactions. So they allow you to send money from point A to point B, but they also allow you to do a lot more complicated things. They let you do things like, for instance, if the price of Ether is $50 higher by the time this contract ends, a certain payout happens. And they allow you to do basically all these sort of complex kind of financial arrangements, which we'll go over some of them in a moment. Very recently, a new blockchain has come out called Polkadot, which is basically pretty similar to Ethereum, except it's much more scalable. It allows people to sort of launch their own new blockchains called parachains that can pretty seamlessly interact with each other and transfer value across those different chains. And this opens up the scalability landscape. It means Polkadot's much faster than something like Ethereum. Although Ethereum is also planning the ETH 2.0 launch, sometime over the next few months, which should really lay the groundwork for Ethereum itself scaling as well. And so the way we think about DeFi is basically as the new underpinnings of a new financial infrastructure. So if you think of the internet, it was the underpinning of a new information infrastructure. Cryptocurrency and blockchain tech is going to do the same thing to finance. An important thing to note about the internet versus prior information revolutions is that it revolutionized two aspects. One is access to information, but it also democratized the creation of new content. So, if you look at, say, radio or television, not very many people are on the radio, not very many people go on TV, but anyone can pretty easily publish content on the internet. And so that's sort of the analogy here for finance. Decentralized finance enables anyone to basically create and access these new financial contracts and arrangements pretty seamlessly. And so if you look at what's needed for this to actually work, there's really I like to think about it, there's sort of like 5 components of any financial system. You have the unit of accounts, like what currency are trades happening in. Globally today, that's basically dollars. In DeFi, it's going to be the same thing. In fact, it already is. People are using stable coins like USDC, Tether, DAI, etc. The next piece is an exchange to actually trade assets. So if you have these new financial instruments, where do you trade them? And there's a sort of concept of decentralized exchanges, exchanges where there's no middleman, the fees are much lower. And those are projects like Uniswap and 0x. Then you actually have how the assets are created, lending and issuance for lending protocols. You also have like synthetic assets that are just sort of created out of thin air. And then eventually you'll have sort of tokenized real world assets. Those are kind of the three main types of assets I think that you'll see in the space. And the last two components are margin and leverage. The classic example of where these are useful is you think of trading a currency pair like dollar yen. At no leverage, it's not very interesting. You're not really going to be able to get much exposure because it doesn't move that much. And so that's why those are actually pretty useful components for a financial system due to like capital efficiency reasons. And so here's an overview of the DeFi landscape. At the very kind of bottom, you have layer one blockchains where people actually deploy these protocols and applications, which we sort of already talked about those. One layer up, you have oracles that are used to basically get real world data into the blockchain. There's sort of two variants. There's really fast ones like Chainlink, and then there's really slow ones like Augur. The reason you would want a slow one is for security reasons. If you have a payout that's pretty high payout, like say a market on the election, you'd want to use something that's very reliable and slow. On the flip side, if you have a margin trading protocol, you need something that's fast. So that's where things like Chainlink make more sense. Kind of going up the stack, you have these decentralized marketplaces. Filecoin's basically a marketplace for file storage. Origin's sort of a more general kind of marketplace for sharing economy apps. If you go up one more layer, you have decentralized derivatives exchanges, things like Vega and Injective. And at the very top, you have aggregators and wallets, which is where most of the users will come in through. So if you look at something like the Earn Finance, it basically allows you to get access to higher yields in DeFi, where it sort of automatically sort of targets your portfolio to get a certain yield, depending on what asset you give it. And then InstaDApp lets you do similar things. It's sort of like a banking interface almost for DeFi that lets you access all of the main DeFi protocols. And so now we'll kind of dial into, I would say, three of the biggest use case areas. So the first one is decentralized exchanges. And these have been growing very rapidly. So trading volumes in DEXs has been growing quite a lot over the past 2 years. In fact, Uniswap actually did more volume than Coinbase did in September. These days, I think it's like 50 to 60% of Coinbase volumes on a daily basis, which is really wild because even the kind of biggest proponents of decentralized exchanges didn't think that would happen anytime soon. And this is, by the way, this is before scalability exists. And so as soon as scalability arrives, DEXs should become even more capital efficient. They should become faster. They should feel much more like centralized exchanges. I think the volume numbers will even increase further. And so some of the main DEXs are kind of listed here on the right. Uniswap, which is the sort of main one people are familiar with. Curve, which is a decentralized exchange specifically for stablecoins. This tech is actually really powerful. Like if you want to trade $1 million in Tether for USDC, Curve is often one of the most liquid places to do it. Whether it's Curve or 0x or something like that, it's actually usually more liquid than going to an OTC desk and asking them for a quote. Or at least it has been many times over the last few months when we've actually done this. The decentralized versions actually usually offer you a tighter price. Next, we have lending protocols. So these basically let you just borrow against your cryptocurrency. Maker is sort of the original one. It let you borrow against your ETH. They've now started listing other assets. The cool part about Maker is it produces this stablecoin DAI as sort of a byproduct of the lending activity. And it's sort of like king of DeFi. It's kind of one of the original projects in the space. Has sort of the most assets locked up in it. And it's sort of like kind of the cornerstone that everything else is built around. Then you have Compound and Aave, which are lending protocols that let you basically borrow and lend ERC20 tokens as well as Ether itself. It's basically like a money market. So there's a rate that kind of the market basically clears at, and lenders basically get paid from the borrowers. And then the last category that we'll go over is payments and stablecoins. And so we already talked about Maker and DAI. We've talked about USDC and Tether. The other kind of interesting stablecoin is this one called Terra Luna. And it's basically a payments infrastructure network that's kind of powered by stablecoins. And they process a lot of payments in Korea. So they currently process over $4 billion in annualized TPV. And so their token actually has like real cash flows associated with it. And it trades at a fairly like reasonably priced PE multiple. So basically the market is in a very different spot than it was in 2017. A lot of these DeFi protocols that we've went through actually have cash flows, or they will soon. They have real metrics and real numbers, and they trade at pretty reasonable PE ratios, even lower than you would see, for stocks trading on the Nasdaq. And so that's, I think, a really interesting dynamic that wasn't the case just even a year ago. And the last couple of things I wanted to walk over are DeFi growth. So we talked about this in a sort of qualitative sense. What does it actually look like quantitatively? And quantitatively, the value in DeFi has went basically from a rounding error in October 2017 to about $1 billion by kind of early 2020, and now to about 12 or so $1 billion this month in 2020. And so it's grown really, really rapidly. We think that growth is going to continue, especially over the course of the next year or two. And this is happening sort of across all areas in DeFi, not just sort of value locked, but also trading volume indexes. You can see trading volume again went from basically zero in January 2019. It's still basically 50 to 100 million or so in January 2020, pretty low. And then in September, it went up to 24 billion, 25 billion. Now in October, the market's cooled off a bit. It went down to about 20 billion, but it's still a really impressive, fast growing chart. The last sort of thing to cover or know about DeFi at a high level is, how does this get bigger? $20 billion of volume a month is pretty high. So is 12 billion AUM. But like in traditional finance, those are very low numbers. And so, what has to happen for this to go up 100 or 1,000x in terms of actual usage and adoption? And we think that there's really three reasons, three things that need to be lifted. So one is the infrastructure is pretty new. It's pretty tough to use blockchains. It's slow, it's cumbersome. And that's true both on the user side and on the developer side. So that's something that needs to be fixed. The next is that getting fiat, or basically dollars, in quickly is still pretty tough. You can go to like an exchange like Gemini or Coinbase and wait a few days and get your money out. But if you want to get involved in like 30 seconds, that's still pretty tough today. And then the very last piece is scalability. So if you think about this tech being this new parallel financial system, or this new sort of financial layer for the world, capacity really has to increase a lot. So blockchains do 10 to 15 to 20 transactions a second. Today, that really needs to be in the thousands. And the groundwork that ETH 2.0 is laying, as well as things like Polkadot, I think will really open that up and actually enable that. That's sort of the last barrier that needs to be lifted. And with that, I'm going to hand it over to Paul to basically open up the panel discussion.
Hey guys, this is Paul. How's it going? I'm a partner at Pantera Capital, and I'm excited about moderating this panel, Deconstructing DeFi. Just one quick housekeeping note. If you guys have any questions, feel free to ask them in the Q&A box, and we'll filter those questions and redirect them to whoever they're directed to, either panelists. So, just to get started, just wanted to do a brief introduction on the two panelists, Ray Tao Su of Akala and Joe Lau of Alchemy. I've known both of these guys for some time. Joe Lau and his co-founder Nikhil are actually the founders of Down to Lunch. Used to be the #1 social app in the mobile app store. That's actually how we met, actually over the app, having lunch. So the app actually does work, and Pantera led the Series A for Alchemy, and they are building the developer platform for all blockchains. And then with Ray Tao and Betty of Akala, they're actually part of the blockchain accelerator at Berkeley. So go Bears. We led the Series A for Akala, and they're building infrastructure, specifically right now, DeFi infrastructure on top of Polkadot. So maybe I'll just start individually with some questions. We'll go back and forth with some questions for both of you guys, and then we'll throw in some audience questions, and then we'll go from there. So I'll start off with Weitao. So, real briefly, can you give a little bit of your background and what sort of inspired you and your team to develop Akala?
Oh, thank you for having me, Paul. So I am, for my whole life, I'm pretty much an engineer. I'm still an engineer today. I'm a nerd. I first get to know about Bitcoin about, I think it's when it's less than $100. At that point, we're thinking about mining that. Didn't do it. Didn't regret it anyway. But about 5 years ago, I got fully committed to crypto. I realized the power of the decentralization. What it attracts me is the ability to truly own your digital asset on the blockchain. I recently read a tweet, I don't know, by someone on Twitter. It's become very popular. Is that you can think about crypto is a file that's in your phone that you can't copy. Well, I think that is there's a high level objection, but I think the idea of like having a file that without only you can have it and no one else can copy is a very easy to understand term about crypto. So this spirit of like having your ability to own your assets on blockchain is what drive me into crypto. About I think about a year and a half ago, I start to realize that people talk about all the stuff that gonna be enabled by blockchain. I believe that. I truly believe that. But we see that finance is probably the first sector that's gonna have some sort of breakthrough. I can see a lot of useful product being created on blockchain. There's financial products. I can see the value that it creates. I can use it as a user, and that's what actually drives me. Like as an engineer, I would like to create something that people uses, and that's why I get started with Akala Network. I'm very fortunate enough to have a set of founders that I meet in New Zealand and also in China. And by the way, I live in New Zealand, so it's still pretty early for me, 6 a.m. You can see the background of my office gonna light up gradually as the sun rises. Well, but anyway, we get started and we committed to say that we're gonna, no matter what we're gonna do, we're gonna build something that's finance related. I'm fortunate enough to meet a set of co-founders that's aligned with the value and aligned with the skill needed to push something. We get connected to the Polkadot or to the substrate, to the Parity team. I mean, way early. We start to build on substrate, I think, for when it start, I think for more than 2 years ago. So we're quite familiar with the framework, and the idea of like having your ability to build a customized network specialized for one particular domain is what would drive us to build a financial blockchain on top of Polkadot. And that's how we get started to build Akala. In a nutshell, a specialized financial blockchain network on top of Polkadot.
Thank you so much, Ray Tao. That's the beauty of this space that I really like. You're the first company that we've invested into in Australia, and I feel like we've basically tapped into every single continent now. And now that the world has gone even more global, really glad that you guys are part of the portfolio. So, Joe, tell us a little bit about your background, the transition from Down a Lunch, this hugely, successful for a short period of time, social app, kind of foregoing being the next Mark Zuckerberg to joining the blockchain space. Tell us kind of what inspired you to come and develop Alchemy.
Cool, thanks, Paul, and good morning, everybody, or afternoon or evening, depending on where in the world you're dialing in from. So we're based in the Bay Area. I'm dialing in from San Francisco. A bit of background, I guess, about me and about the company. So like Paul mentioned, my co-founder and I were both engineers. We met studying computer science at Stanford. Always have wanted to build products for people, and we started out doing that in consumer social. And we built some things that were really successful, had a lot of users, but we'd always been watching, like many of us here, always been watching blockchain, always been watching crypto, had seen Bitcoin. The tipping point was for us in 2017 when we saw Ethereum really start to take off, where we saw blockchain not just as a store of value like Bitcoin, which is already itself very valuable, but seeing Ethereum start to advance as a technology platform where developers and companies could really build entire experiences, could build essentially what we're seeing today, recreate the financial framework and all that financial infrastructure. We saw the promises of that in 2017. And that looked really exciting. And it felt like the future, felt like the next technological shift. And that's essentially, it was a hard decision for us. We were like, should we stay in consumer social or should we move into blockchain? But at the end of the day, I think, if it's 95 and you're running a really successful like movie rental store and the internet comes along, you would, it was not a good decision to stick with your business. And it was really the best decision to jump on this new technology. So that's what we did. And we've had a blast since then. So started Alchemy in about 2017. Our goal, kind of the reason we started it was, we saw, again, blockchain as a technology. We saw the huge potential that it had for obviously financial services and financial infrastructure, which we're going to talk about today, but across a number of different sectors like identity, privacy, data. Like you can just look around and there's so many things being built. But the thing that was missing in the space is, we saw all these developers and companies wanting to build these really useful products that would have huge impact, but they're stuck. They weren't able to build the things that they wanted to build because they didn't have the infrastructure and they didn't have the developer tools that they actually needed to be able to build those things. And if you look at history, if you look at technology trends over the last 30 years, you see the same pattern in any technological shift. So when you look at the personal computer in the early days, it's really tough to build anything for the PC. And you didn't get applications that were useful to the user, like Microsoft Word, Excel, the browser, games, whatever it is, until you gave developers the infrastructure and the developer tools that they needed. So that was Microsoft, which created Windows, and that was also Apple, which created Mac OS. The operating system was what gave developers the ability to build applications. So now we're at that same stage. You see the same thing with the internet too. Now we're at the same stage in blockchain where there's a lot of promise, which is in the middle of being unlocked. But what will truly unlock that value is giving developers the infrastructure and the platforms that they need to be able to build the things that they want. So an easy way to understand this is, think of what Amazon Web Services did for technology companies. They made it way easier to build a technology company by giving developers the tools and the platform to build those things. You look at what Stripe did for payments. You look at what Twilio did for communications. All these platforms are based on making it easier for companies to use a new type of technology. So at the end of the day, that's what we're doing at Alchemy, is we're basically building that infrastructure layer for blockchain, for developers, for enterprises, and for anyone that wants to use blockchain. So at a high level, that's what we've been doing for the last 3 years now. It's going really well. We power about 70% of Ethereum applications, millions of users around the globe weekly, and also about $8 billion of transaction volume annually. And last year we raised our Series A, so super lucky to have Pantera on board. Pantera led our Series A. We're also fortunate to have Chairman of the Board of Google, Reid Hoffman, Peter Thiel, and a lot of other great people involved.
Awesome, thank you so much, Joe. Yeah, a lot of traction, a lot of good investors, of course, and brand name behind the company. So really excited about what you guys are doing. So, we're here to talk about DeFi. I think Pantera believes that DeFi is really exciting because blockchains enable the trustless transfer of any sort of asset between any parties. And, that's just amazing. And it hasn't been able to be done before. So I think back to you, Eital. I mean, how does Akala sort of play in the DeFi ecosystem, and how are you sort of going to enable that to happen? And, how do you think about interoperability?
Well, I mean, first and foremost, I think the Akala network is the corner pieces for the DeFi layer in Polkadot. I mean, that's where our root is. So, I mean, to explain what Akala network is in a nutshell, is that unlike on Ethereum, sorry, actually I have a fire alarm testing in my office. I'm hoping it's not actually too disturbing. But I mean, back to the topic, I think unlike, I think we can bear with that just for like 1 second and it's gonna go away.
Engineering at work.
Yeah, always working. That's why
Yeah.
we bet on him.
Yeah, so this is like for extra safety. I was thinking, okay, I think it's finished. So I mean, that's the spirit of like what you get for getting early into the office, right? So I mean, back to the topic. I think on Ethereum, you got the ability to build that. But on Polkadot, you got the ability to build a blockchain while being secured by the Polkadot networks. So we actually have a lot more flexibility in terms of like what we want to build and what the rule we want to set. So what we did is that we take advantage of this functionality offered by Polkadot, and we created a so-called parachain and specialized that for financial infrastructures. Deep into the core, the Alkala network offers stablecoin and decentralized stablecoin inspired by the overcollateralization model of MakerDAO. And we also built a set of protocol to interact and to work around with this stablecoin. And this number of protocols, or we call the financial primitives, work very, very closely or smoothly with each other to support a much smoother, much more efficient experience of DeFi on Polkadot. So I think the first, that is setting the Alkala network as the corner pieces or as the foundation layer for Polkadot network. And when we talk about interoperability, there's a number of levels of interoperability in Polkadot. So for example, one project they have been working very closely with is RAM project. They are building a bridge from Alkala network to the RAM VM, which enable RAM BTC to be teleported and to be utilized in the Alkala network. I think this is something that's very promising because that will unleash a lot of utility value for Bitcoin. So that's one example of like the interoperability. We can see that project can build directly with Alkala network because deep into its core, Alkala network is still a full-fledged blockchain. While it's not reliable for its own security, it's reliable for its own rules. And the other interoperability we can see is that how parachain, like a different shard in Polkadot, interact with each other. We see the way that Polkadot evolve is that it's gonna slowly evolve into a number of like domain specific or application specific blockchains. So we foresee there's gonna be something like a gaming chain, there's gonna be something like a DAO chain, there's gonna something like a marketplace chain, and all these blockchains they're gonna interact with each other via the Polkadot relay chain. So in that level of interoperability, we think the stablecoin that we are offering could be circulated trustlessly in all these different areas. So that's another level of interoperability. And ultimately, Polkadot relay chain is, or the Parity team, they're also building bridges to other networks such as Ethereum, Bitcoin, or any network that has like solid and mature token on top of them. And the way that we see the future slowly evolve is that money Lego is gonna slowly turn into inter-blockchain money Lego. And hopefully Alkala can play an important role to make that a reality.
Awesome. Thank you so much, Ray. We'll get a little bit more into Polkadot and some of the different chains a little bit later, but Joe, why is Alchemy used by so many, more than 50% of the Ethereum ecosystem, potentially other chains? Like why are people using Alchemy? Why is it for developers? Why is it for applications?
Yeah, that's a great question. So, one of the things that's really fun about our job is we get to work with a lot of the leading teams in this space. So some of the ones Joey mentioned in his presentation. So we work with Maker, we work directly with Aave. These are two of the leaders in DeFi. They each have, I think, $1 billion plus in value locked. And we've also worked with a lot of younger companies, a lot of startups, and a lot of up and coming protocols in DeFi. So we get to see the whole space, which is really exciting. I think the main reason people use Alchemy and the main reason Alchemy is important for these companies is at the end of the day, what we do is we help these protocols, these organizations build what they want to build faster by giving them the tools and infrastructure that they need to get there. So again, looking at the AWS analogy, before Amazon Web Services, you had to have your own data center. It was a ton of work to be able to even put up a website. But today, now you can just do it, from your laptop. You have the same kind of thing playing out in blockchain where before Alchemy, it was really hard to build your own protocol, to build your own application and have that go live. You have to run your own nodes. You have to manage them. There's a lot of infrastructure set up that didn't necessarily, it wasn't a differentiator for what you were building. So what Alchemy does is we do all that heavy lifting so that companies like Aave can build Aave and Maker can build Maker, and they don't have to worry about, you know, pieces of their infrastructure that aren't a differentiator for their end protocol. So at the end of the day, the way I think of it is, you know, all these companies in DeFi and in blockchain in general, they want to build skyscrapers. They want to build really awesome things, but the only tools they have today are really like hammers and shovels and nails. Like they don't have the tools to build the skyscrapers that they want to do. What Alchemy does is we come in and we give those developers, you know, cranes, power tools, construction equipment. We give them the things that they really need to be able to build the skyscrapers that they want to build.
Awesome. So how long does it take for a developer to get started with Alchemy?
That's a great question. So without Alchemy, it probably takes 3 weeks or so to really get all your infrastructure set up and be able to ship an app into production. With Alchemy, you can do it in 2 to 3 minutes.
Wow, that's a huge time and cost savings right there. So you know, glad that we have you guys around. You know, I guess zooming back a little bit. I mean, you know, some people say that we are kind of coming off of the first DeFi bull run, and you know, what do you think are some of the misconceptions about DeFi? You know, some people were saying that, oh yeah, this is like ICO bubble 2.0. Like, why is this not a fad? Why is this something that we should think is going to be something that is sustainable, something that's compelling for the future? This is for both of you guys.
Yeah, probably I will take that answer first because we are building a DeFi protocol. We are in the forefront space of building. I think it's very different. Fundamentally, that you can see the actual use case or actual use scenario out of a DeFi application or out of the DeFi protocols. It enables like this intermediary effects of like I've been telling a lot of my non-crypto friends that I've been saving on Compound, or there's now a decentralized commercial bank happening on blockchain that you can save your stable coin or your money, and then you can earn a lot of reward directly from the interest paid by the borrowers. So I think those there's actually like we saw all the hypes, we saw all the speculation. There's like 2 use cases. There's 2 revolutionary breakthrough of DeFi that offers. But I do believe that in the short term, there's because with any sort of like speculative technology, any sort of like promising technology, there is some sort of speculation unavoidable. We can see a lot of yield farming stuff that's happened and went crazy in a month or 2, and then went away. We can see a lot of like APY number that's going crazy, skyrocketed, that's unsustainable. I think, and actually when we actually trying to raise capital for the Alcala network, we talked to all the investors to talk about, hey, we deeply believe that this is something that's truly valuable, but we also see the hype that's happening on the DeFi space right now. And we say that upfront that we think this sort of like speculation is unsustainable. You will see a lot of hype and APY or short things like that gonna go away. But after they go away, you will see the true value, like what is the most important instrument that you look at a particular DeFi protocol or DeFi application is that how many users they actually serves, what sort of value that actually it creates, what sort of transaction volume that it actually help to facilitate. And that those is the most important instrument you have to look at in looking like any particular use case for a particular application. So I think I definitely believe that this yield farming stuff, it's great, but it has to a lot of speculation goes around that. It's gonna slowly fade away. But the true value of like the DeFi enables, giving you control of your assets, give you a sense of safety that your collateral is fully transparent inside the protocol. All those stuff gonna stay and it's gonna grow. This is just the very beginning of what we see. I think ultimately it's gonna revolutionize the whole financial sector. So that's what I think.
Yeah, I think Ray Tao's right, and to really build on that at a high level, you know, obviously at the end of the day, what DeFi is doing is we're rebuilding the entire financial infrastructure. And keep in mind, DeFi has been around for, depending on how you slice it, a few months, a couple of years. Ethereum as a platform has been around for maybe 4 or 5 years or so at its earliest. Financial infrastructure has had centuries to evolve. We've had centuries to build out, banks, currencies, how we do lending and borrowing, things like that, right? That's not going to be invented overnight, right? And that's not going to be moved over to different technology overnight. So I think what we're seeing, my opinion is that it's probably here to stay. It's almost certainly here to stay. And the questions are, there are some challenges, which we'll get into, I think, later in the panel. But when you think about the promise of what DeFi is, it's taking things that we know we need, which is financial infrastructure, and it's doing it in a way that's better. It's more open, more transparent, more easily enforceable from kind of like a contract perspective, and also digital, right? So no longer analog, but really powered by technology now instead of more like legacy systems is what I'll call it. So that's definitely coming. The question is how long it's going to take, and I think we're going to be progressing in that. I think we're going to see a lot of advances over the next few years. I think people are going to iterate on a lot of different things. I think the thing to remember is technology. The progression of technology is not always just not straight line up and to the right. Like you look at something like the internet in '95, we were just getting started. People were like, "Is this a fad or not?" Like, we're starting to put news on the internet. Is that going to stay? Like, why would I do this instead of a newspaper? There are a lot of questions like that, right? And then in 2000, people were like, oh, the internet's done. Like, this bubble popped. It's just a fad. It's gone. But you look at where we are now in 2020, and the internet has impacted our lives way more than we thought, even at the height of the bubble in 2000. And that's just how technology works. Is as it progresses, people see more and more use cases. So I think I think we're going to see similar dynamics with DeFi and maybe even with blockchain overall, where there's a lot of promise. There's a lot of long-term impact and value, probably even more than we can see today. But there are going to be short-term cycles of speculation and other things that are maybe a little bit of a distraction. But underneath that, the technology is always going to be improving, and as long as the use case and the value there is important, which it is, being financial infrastructure, I think we're going to see a lot of progress in that long term.
Yeah, I agree with you. I mean, I think it is time to remove those intermediaries, and as long as the speculation helps with the education, we can retain more of those users. They become, invested into these different projects. Then, we can hopefully do something with that increased user base. So that's a great segue into the next question that I had for Ray Tao. Some people say, hey, you build it and they will come, but I don't believe in that. I think you have to, sort of do some marketing. You have to nurture, build a community. Vitalik early on with Ethereum, Gavin, of course, with Polkadot. How do you think about building and growing a community, especially in DeFi, especially with liquidity mining? And as you know, like, that has been one of the huge trends to kind of build a community. But now we're starting to see liquidity mining change a bit ourselves with, vesting and lockups and all this kind of stuff. So, I mean, Ray Tao, how do you think about what you've done and the success that you've done with your community and how community building evolves over time?
Well, I think this is a great question, Paul. So I look at the community building as a number of ways. So I think the most important factor you want to look at is that you got to create something truly useful for the community. You can't speculate and have a community of speculators. It's not going to stay. So I mean, the foremost important for what we are doing on our current network is that we'll focus on the product that we're building, and it's going to offer some sort of like true value for the community member. For example, one of the product they will be offering in the Alcala network is the Liquid Dot or Liquid KSM, which allow you to stake in a trustless staking pool, and in exchange getting an L dot on L KSM back. So you no longer have to bound to the Polkadot or Kusama's 28 days unbounding periods. And by itself, this program I think is going to be extremely useful for the community member to take advantage of. So I think that's one of the core fundamentals that we're going to create something that's truly useful. And for the Archive network, it's very likely that will be the first decentralized exchange on the Polkadot network trustlessly. But having the product itself is not enough, right? So you build something awesome, you still need to bootstrap that. So we will see that in a number of ways. So we're tapping into the great community that Polkadot or the Kusama network already built, and we're going to serve them as our primary set of customer. But having that is still not enough. We would like to grow like beyond Polkadot and enter this like inter-blockchain money Lego future that we foresee. So we'll slowly start to reach to other crypto community to tell them about like this is coming, like you can have utility value out of your Bitcoins. The inter-blockchain money Lego is getting to play. And I think that's the fundamental. You got to create something that's truly useful for the community. And talking about yield farming, I think there's like fundamentally there's nothing wrong with yield farming, right? You want to reward your early participant in the network. I think that's the spirit of blockchain. Your network wouldn't be a network without the users to provide the capital. It wouldn't be a network without the traders or the liquidity providers. So I think it's always right, or it's something you have to do to reward the early participants into the network. The thing is that you cannot do it as like the pure reason that a trader or liquidity provider will get into your protocol, because we can see there's like when we talk about like the yield farming, I think there's like two set of liquidity. There's the loyal liquidity that understand what the true value of your protocol, and they're gonna stay. There's also this super speculative liquidity. We can see what happened with Sushi Swap. There's like 2 billion or roughly 2 billion worth of not that royal liquidity. They will just seek for the highest yield wherever that's available in the blockchain sector. So I think the key stuff that we are looking at is that we like to build the user bases or the liquidity provider, anyone that's in the network, to stay loyal, to understand what we are building, and they believe what we are trying to create, and hopefully they can stay for long term. When we're going to launch the network, there's a number of rules, or there's a number of plans to make sure that the early participant of the network get rewarded, and they're going to align with what we envision, and hopefully they can stay for long term. Talking about in the blockchain or in the DeFi space, you can see liquidity is no longer a moat because it can move around. It can have like this super liquid stuff. We think that for now, it's more of like looking at the community is one of the moats, and there's also a number of other moats that we're looking at and we're trying to build. I think how much asset the protocol itself directly managed is going to be another type of moat. That's where we're building the Archive treasury that I can always looping back that a little bit later. But I think just to stay in the topic, I think having a set of strong community, make sure the community align with what you are trying to build and make them stay is very important for a particular protocol like us.
Awesome. Thank you so much. You covered one of the questions around liquidity and sort of Sushi and Uniswap and lack of moats and what kind of keeps companies sustainable. So 2 for 1 on that one. So Joe, this kind of loops back into community, but you obviously have a community, a huge network of dApps that are building on top of Alchemy. What sort of trends are you seeing? What sort of data are you seing? And which types of dApps are you most excited about?
Yeah, that's a great question. And there's so many things to talk about here, but I'll keep it pretty short because I know we're running a little short on time. So I think, in terms of dApps and trends, we're seeing obviously a lot of stuff happen in DeFi. DeFi is not the only spot. There are a lot of things like games. We're seeing also other people look at, kind of different things around data and identity and privacy. I think DeFi is the area that I'm most excited to see take off, because I think that there are clear analogs for why that's useful and why that's really valuable for people. I think, one trend that we're seeing, and one interesting thing that we see is successful companies and projects and protocols can get huge overnight. You see this with technology in general because of how easy it is to adopt a new technology or how easy it is to use a new application. but we've seen people onboard onto our platform with almost no usage, and then a week or a couple months later, they're without giving anything too much away, like they're being used by almost everybody, and usage is off the charts. This isn't something that we track or anything like that, but just from talking to developers that we work with and the teams that we work with, like we're seeing some people grow really quickly, which is really exciting. In terms of trends, some of the one thing we're really starting to see is a lot of people going with, we're really starting to see the money Lego thesis start to play out. I think Ray Tao mentioned this. But because we have an open system, people can build protocols, and then people can build other applications, experiences, and protocols on top of those protocols. And everyone, you kind of get this web of functionality that people can build on top of. So I think we're really starting to see that come into play now, because we have things like lending protocols and stable coins at the base, but then we're starting to get things like interest-bearing accounts, or things like wire and finance, if people are familiar with that, which are built on top of these money Legos. And now that we're starting to see that trend, I think it'll be really interesting to see what people build. The other thing that I'd want to call attention to is, I think one really cool area is looking at what can be done in blockchain that can't be done anywhere else. So again, not just about what technology can build it's not about what technology can build that already exists today, but can build better. It's also about what technology enables that was never before enabled. So I think I saw some questions in the chat about flash loans. Flash loans, super interesting, because it's not something that can happen in today's financial system. And it opens up a lot of different opportunities. It democratizes capital to some extent. Now you can have, someone with a laptop connection, and some trading ability, be able to trade with millions of dollars, whereas there's no way that they could do it today. So that's just one implication of that. Obviously, there are a lot of technical implications, but seeing where advances like that go will be really interesting, because those are new building blocks that we've never had before.
Great. No, that makes a ton of sense. I guess one question for both of you guys. What are some of the hurdles that sort of that we need to overcome to finally get DeFi into the mainstream? And I guess particularly maybe Ray can talk in addition to whatever else you feel like definitely on the scalability side, and I think Joe, especially on the infrastructure side, needed to sort of take it to the next level. Either one of you.
I think the current DeFi sector in Ethereum, there's a common node. I would say that common node secret is that it's a very heavy game, right? Because there's bottleneck on the network, and there's a lot of fee associated with trading on DeFi on Ethereum. So it doesn't make sense to trade on DeFi unless you have certain amount of capital. I mean, at the core, that's the performance issue they're talking about. But we think we need to lower that bar, so to make it meaningful for small individuals to actually participate and enjoy the return of DeFi. And that's one thing I think performance is going to solve that issue as time evolves, as technology matures. The other stuff that we're going to look at is that we're still very early in the game. There's a lot of very counterintuitive design on DeFi, mainly due to limitation of like the current ledger. So for example, if you're transferring DAI, you are paying ETH as the gas fee for the transaction directly. For a non-crypto user, that's a very counterintuitive concept. Like, why do you have to pay a foreign currency in order to transact in this particular currency? And that's something that we will adjust when we're giving the flexibility of the substrate framework. We can adjust. So I think lowering the heavy nature of DeFi currently, and also boosting the user experience is like two areas that we need to focus to see a lot of adaptation on DeFi. Other than that, I think having this truly trustless technology is just like one side of the solution. There's also some so-called CeFi. I mean, there's users that they might be using DeFi, they haven't realized it yet. So I think that's gonna play a role as this sector grows. So overall, I think we are still very early, and there's a lot of hurdle we need to overcome. But it's a very promising sector to be in.
Yeah. To add on to that, a lot of technology challenges like scaling, et cetera, throughput, which we more or less talked about. I think there are some challenges around around the pace of development. So there are a lot of people really excited about building on blockchain, but again, it's still really hard today. So things that we can do, we're one of the people working really hard on that. But if we can speed up how quickly developers can build applications, it spins the flywheel of adoption, because what happens is you have developers which build applications, applications bring in users, users make it more enticing for developers to build more applications, and so on and so forth. The faster that wheel spins, the faster we get technological progress, and the more quickly this industry starts to take off. So we saw similar things in other industries like mobile, cloud, personal computing. Same things can happen in blockchain. So that's an area of focus for us and for some other people in the ecosystem as well that are building infrastructure and tools like we are. The other thing that I think is really important is it is, at the end of the day, it's pretty early and there are still some kinks that we're trying to iron out. You know, there are still protocols are still trying to figure out the right incentives. There's still, you know, security issues around new building blocks like flash loans that the industry is still trying to figure out as a whole. I would think of these as, you know, growing pains for any new technology. But I'd expect over time, you know, we figure out more and more of these things. People are more and more comfortable, you know, trying out new protocols, leaving their money in DeFi. That's naturally going to grow over time. And as people get more comfortable, we're going to see more and more people come in.
That's great. I love the mobile analogy. I was early on in mobile, and I see a lot of translation. We have a couple of minutes left, so last quick question for you guys. It's a question that I usually ask my panelists just to kind of get them to think a little bit. But you know what, and I guess, you know, speaking specifically to DeFi, I mean, what hasn't been built in DeFi or for DeFi that you would want to be built? So sort of like a request for startups. And if you can't think of anything, then I guess a backup question would be, what is a project in DeFi that you're excited about that not many people know about? So if you can answer the first question, that's great. If not, then second question.
Yeah, I think I'll take this question. I think there's a lot of, we are still very early, and that's just like Joe mentioned, there's a lot of missing block in the space to make sure DeFi have like adaptation. Like there's no decentralized insurance. I mean, there's one or two decentralized insurance policy. I think insurance definitely one very niche sector to get into. I mean, you won't see a lot of adaptation unless the capital provider have a sense of like safety that their money not gonna go away when they wake up and there's a smart contract failure. So I mean, you have full confidence that your capital is fully capitalized, or there's no way people can take it, but there's still like smart contract back. So insurance is one sector that's like has huge potential. I can also see a lot of derivative that can be created in the staking derivative product. You can start to see a lot of staking. There's a lot of staking play that's coming to play as well. Like, and if you combine those two, you can have like slash protection or things like that. There's a lot of market to be explored. I can go on this forever. As just one thing to take away, it's very early. A lot of pieces still missing for serious money to move into this sector. Like this insurance, there's a lot of protection, but again, it's gonna happen sooner or later. So
great. Yeah, we're looking at both of those two things too. Joe, anything you have there?
Yeah, so there are a million different things here. One thing I'd love to see is uncollateralized lending. So we have collateralized lending. We've done a pretty good job. Uncollateralized lending is the backbone of a lot of our financial infrastructure. And that's probably the next big step, or that's one of the next big steps that I'd love to see in DeFi, because that opens up a lot of different doors. So I know there are a lot of talented teams working on that right now, but uncollateralized lending would be a huge step forward.
Yeah, you know, I've been excited about that for a while now, and if we can figure out a way to sort of build up credit in a decentralized way, you know, that would be pretty awesome.
Yep.
Well, hey guys, thank you so much. You know, I know that, you know, one person it's a very early morning, and another person, it's a very busy street behind him. So thank you so much for giving your time to talk about DeFi here. We're going to end the rest of the call with Dan talking about some of our funds.
Cool, thanks for having us.
Yeah, thank you. Just want to wrap up with a quick summary. If you have any questions that we haven't yet answered on the Q&A box, feel free to go ahead and ask them. The panelists and the rest of the investment team are here to answer your questions. We'll stay on and answer all the questions until we're done. We wanted to highlight the fund programs. We provide access to the entire spectrum of blockchain, from daily liquidity Bitcoin funds all the way through venture. Our venture funds are closed right now. They're being invested, but the hedge funds are all open. The Bitcoin fund is, I think, the most efficient way to get access to Bitcoin via, financial product. It's a daily liquidity hedge fund. It has the lowest fee ratio in the business. It also has no premium to NAV, which some of the exchange traded things do. No lockups, no redemption fees. So you come out any US banking day you want. The other funds are monthly subscription. They invest in liquid tokens like the digital asset fund, invest in Bitcoin, ETH, XRP, and then the ICO fund invests in these protocols prior to them going public. So it's the ability to get invested in things like Filecoin or Polkadot prior to them becoming public. The next slide has a quick update on the performance, and it really highlights the view that obviously Bitcoin's important. It should be a big chunk of your portfolio, but some of the other assets, like the DeFi assets, like we were talking about earlier, are able to have much more volatile. They go down faster in the bad times, so they go up faster in the good times. So the performance in the ICO fund and the digital asset fund is outstripping the general performance of the market, and especially Bitcoin itself. If you have any questions that we haven't answered, you can always get in touch with us via our investor relations team. It's ir@panteracapital.com. Happy to route the questions either about subscriptions to our investment or investor relations team, or if they're about the markets, to Joey, Paul, or myself. We are having we're always trying to communicate, spread the education with the industry. We do send out a monthly investor letter to 85,000 people. You're presumably one of them if you're on this call, but for those of you who've joined the call some other way, feel free to log in at our website or ir@panteracapital.com to get that. So we'll see, for those of you who want to attend our introduction to blockchain investing, that's the next webinar we have. It's December 1st, where we'll go over kind of the big macro case of why blockchain. And in January, we'll go back into a deep dive like this. Thank you so much for joining, and look forward to the next time we connect.